as you said, it's not buildable at this price. We don't know what's going to happen to the uranium price. This 30,000 metre drill program that you've released, is a lot of that extensional?
We're about growing the resource as large as we can, and to begin with the inferred resource. So we're at 58.8 million pounds. We'd love to be at 100 million pounds by the end of the year. That's when we'll look at changing the scale of the project and updating feasibility studies.
This is general advice and my opinions only. This episode's company has paid me for this interview. I may be long, short, or hold an interest in stocks or CFDs mentioned. Past performance isn't reliable. The interviewee's views are their own, not necessarily mine. LEVRD operates as a corporate authorised representative 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website link in the show notes.
Righto, bag holders and stop loss haters. I've been a bit quiet on the yellow cake. And I'll tell you what, after doing my ass on Lotus, I've had a look next door and thinking, do I go back into Lotus? Or I'm seeing in Sam Christie's emails that Atomic Eagle's getting a mention, AEU. And I've got the main man, CEO, Phil Hoskins on. Mate, welcome to LEVRD.
Thanks for having us, Matt. Yeah, great to be here.
Oh, mate, good to be. Uranium's been a bit quiet. It's just been, price hasn't moved much during the war thing. It's the one thing that just hasn't really done anything, would you say?
Yeah, it's been going sideways, $86 spot. I think it's 93 term at the moment. And I think a lot of the equities have traded sideways, sort of except for Lotus and Peninsula. Through this year, so but I do think it's one of the things that will come out pretty well out of the whole Middle East side.
Yeah, right, mate. You're in Zambia, so this is where, and we'll go through the. Actually, probably better just to give the history of Atomic Eagle's come out of Goviex, sort of backdoored into a iron ore shell, you'd say, in Australia. Give us the overview, mate.
Yeah, so Tombador Iron was the shell. Late November last year, 25, was a reverse takeover of Goviex Uranium Inc., which is a TSXV listed company that had been around 20 odd years, mainly working on a uranium asset in Niger, and Zambia was their secondary asset. But the Zambian asset was always a big attraction to our team, which included Grant Davey and Keith Bowers, who were founders behind Boss and Lotus. So they always had their eyes on the Zambian asset. That's what we RTO'd off the back of.
Yeah, and we're not going to forget about the Niger asset. We'll talk about that later, but obviously your business is built around at the moment your Zambian asset. Now, talk to me about, before we get into the project, let's talk about Zambia. So a prolific copper district, you'd say. It has had issues in the sovereign risk issues in the past around copper. What's it like as a jurisdiction, as a uranium jurisdiction, or is it a copper jurisdiction more favourably?
Yeah. Look, I've been there twice now in the 5 months I've been in the role. Just came back a few weeks ago. Spent a couple of weeks up there ahead of the drill season. As you said, it's the 7th largest copper producer globally. So I think mining makes up about 10 to 15% of GDP, but I think copper makes up about 75% of mining. So clearly, copper is the main game in country, but the government want to diversify away from copper. They love the idea of a uranium mine. Our companies, the subsidiaries have been at this for some time in country, so they're very keen to diversify away from copper. Think they are very favourable to uranium. They're also very favourable to a mine in the southern province where we are, which is away from the copper belt. So geographically, there's some good diversification there. And if you're going to do business in Africa, and I've spent a lot of time in Tanzania, Zambia's in the top 3 on the Fraser Institute. It's ahead of Namibia for what it's worth, and no government free carried interest. So the take for investors is and mining companies is as good as it gets.
Do you think, but if do you think there's a risk if like uranium prices soar and copper prices soar that government ownership might come into the mix eventually? Is that always something you got to consider?
Yeah, look, it's Africa, but I think not under the current president's rule. So the president used to be a partner at PricewaterhouseCoopers, mineral economics background. The guy's going to get re-elected later this year, and he'll have another 5-year term. Like, they're trying to go from 1 million tonnes copper to 3 million tonnes copper. You don't do that without creating a stable platform for investment, and that's one of the things that they're really looking to do moving forward, is attracting more people on the exploration and development side. And they've just flown a countrywide geophysics program through Excalibur that'll have aeromag, and I guess importantly for us, it'll have radiometrics as well. So they're really favourable to attracting foreign investment and keeping it stable.
Yeah. So, and like, because the incidents I referred to about historical stuff in Zambia, looks like 2018, First Quantum had some issues there, 2019, Vedanta. Has there been any other recent ones, or are they sort of a bit, they get sort of put in that stable because of those ones about 6-7 years ago now?
Those were isolated. I don't think Zambia is known as a company that's big on expropriation. I think those are pretty complicated cases in both fronts, and I think COVID came in on the Glencore one as well. And look, I think there's complications around that, and but copper's really important to the country, and so I guess any African country, when you've got decent projects that if they feel that they're not being moved ahead, they're going to put whatever pressure they can on to make sure that companies are doing the right thing. Unfortunately, having just come back from the country, we've got full government support for everything we're doing, and they like the strategy, seeking to grow the resource and update studies and build a mega uranium mine in Zambia.
Yeah, very good. Right, that's my sovereign risk investigation complete, mate. We'll get onto the yellow cake now, mate. So note that all right, take us through the project, and we'll note that this is the old feasibility study from the Goviex days, and you've just started a 30,000 metre drill program, and I assume you're going to be doing your own one soon. Take us through what you got at the moment and what still applies and what doesn't.
Yeah, no worries. So I guess starting with the resource. So when we took this over, it was a 47 million pound resource. Within a few months, it was a 58 million pound resource. So we spent $700,000 on what we considered low-hanging fruit into two deposits, Chisabuka and Muntanga East. Added 11 million pounds with $700,000, so 5 cents a pound. Pretty good hit rate.
Not can you keep that up?
Yeah, exactly. So now we're at 58. We've been in the wet season, and I'll talk about the drill program later. But with the 58 million pounds, that's just across a few different deposits. The two central deposits are Muntanga and Davey East. Those were the two deposits that Goviex in March 2025 did the feasibility study off the back of. Overall, there's a measured and indicated resource there of 40 million pounds at 350 plus ppm. But yeah, it was Muntanga and Davey East they did the study off, and just the measured and indicated resources of that.
Yeah.
Now they came out with a 12-year mine life at 2.2 million pounds per annum. 2 million pounds per annum is akin to a 40,000, 50,000 ounce gold project. So it's quite small. And the economics then, $282 million capex, 240 mil NPV. It's not jumping off the page saying develop me at $90 a pound. So then the question is, well, what do you do to fix that? And it's all about scale. So I'm sure we'll talk about heap leach processing, but the key to improving the economics here, and I think Bannerman's the nearest analogy, is to go from a 3.5 million tonne per annum plant costing 280 mil. Bannerman's an 8 million tonne per annum plant costing 350. And so if you can increase the scale, the economics are going to look drastically better. And I can talk to how we can achieve that scale. But the beauty of the feasibility study, and I guess the takeaways of the feasibility study, it is an NI 43-101 FS, which is like a definitive feasibility study here in Australia. The mining work's been done to DFS standards, so we know it's low strip ratio, open pit. We know that the recoveries from very simple heap leach operations are plus 90%, which is excellent. We know that the acid consumption, which is a big driver of operating costs, is low at 20 kilograms per tonne. So what we can take away is that we think the project is developable. It will make sense at the right scale. And that's what we're focused on. That's why we're drilling 30,000 metres, and I think it'll probably be upwards of 50,000 metres by the end of the year. Continuing some of the low-hanging fruit at Chisabuka, where we added a 10 million pound resource, as I said, with only $700,000, and but then into some really exciting targets at Namakanda and Muntanga North as well.
So on the heap leach, mate, before we get into the mechanics behind it, where is it being utilised around the world? It's interesting to hear heap leach and pour an acid to leach uranium out. You're like, Jesus Christ, that sounds out there. But is it being used elsewhere compared to conventional uranium processing?
Yeah, I think if you look at in situ leach is essentially pumping the stuff into the ground to recover it, and I guess that's the cheapest. If you can get that right, that's the cheapest mode of uranium processing because you don't actually have a mining cost. A simple acid heap leach is secondary behind that. So you've obviously got the mining cost, but all you're doing is creating heap leach pads and having sprinkler systems with acid and the like. That was essentially permeating their way through that and creating the uranium recoveries. So I mentioned before, from the development side, Bannerman is the nearest sort of technical comparison there. But if you want to go, and that's, I think, the next cheapest, if you can get the right scale. Going all the way further, if you can't get decent recoveries from heap leach, you're talking about milling the ore. So at the moment, we're crushing to a 25 millimetre size, chucking it on a heap and letting the acid do the work and getting 90% recoveries. If you couldn't get those sorts of recoveries, you'd be grinding to 0.1 mil. And obviously having a mill in place to do that, which is very energy intensive. There's a lot of maintenance. And so those costs of achieving those recoveries, if you need to go down to that path, are quite significant. So if you can get away with the recoveries we are with such a low acid consumption, you're going to go down that route every day. So
this is what Bannerman's proposing, pretty identical flow sheet?
Yeah, no, very simple heap leach operation. They've also got good recoveries and also low acid consumption. I think one of the differences between us and Bannerman is our grade is plus 350 ppm on measured and indicated. I think Bannerman's in the low 200s. So they need scale, but at the same time, we're looking for scale to make the economics look as favourable as possible.
So is there any existing operations globally currently heap leaching?
I'm sure there is. Look, I'm 5 months into the role. It's not what the Kazakhs are doing, and I'm sure there are. It's not a. This is as simple as it gets. When you talk about a 3-stage crush, you're doing that for road base. You're doing that everywhere in the mining industry. The risk really is making sure that you're going to get the recoveries in the heap, and so in your MET test work programs, that's the work you do, and we're very confident from the variability work and the composite work that we've done on those deposits that we've tested today, that we're getting excellent recoveries.
Is there what differentiates a mine that's able to heap leach and able to not? Is it something in the geology of the rock that, because it sounds like everyone would do it if they could. But...
Yeah, look, I think it's if you've got simple sandstones. I'm not a geologist. My background's finance, but it is in the mineralogy. It's you've obviously got acid coming into contact with parts of the rock and being able to leach out the uranium. So the question is, can you do that from a coarse size, or do you need to grind it all the way down to a fine size to achieve that? And so I'm sure everybody goes through the different amounts of test work to determine which path that they're suitable for.
Yeah, copy that. So I guess, can we expect this year going forward? Because you'd say it's not, as you said, it's not buildable at this price. We don't know what's going to happen to the uranium price, but this 30,000 metre drill program that you've released, is a lot of that extensional? Is there much infill in that, or is it all about growing the resource?
We're not about infill this year. We're about growing the resource as large as we can, and to begin with the inferred resource. So we're at 58.8 million pounds. We'd love to be at 100 million pounds by the end of the year. The exploration target that we released in December was 40 to 100 million pounds. So that would take you to that sort of 100 plus mark. Now, where's the drilling going to be? Chisabuka, where I said we added the 10 million pounds, where we're drilling out the rest of that. That's a 4 kilometre by 1 kilometre mineralised zone. that 10 million pound area is 800 by 600 metres. So we still think there's plenty more at Chisabuka. But then the two things that really excite me, Muntanga North and Namakande, there's 10 discrete targets across those anomalies, across those areas. Got the same geochemical and geophysical signature that the other uranium deposits do on the property. And some of these anomalies stretch for 5 kilometres. So the potential to find another Dibwe East, 30 plus million pounds, I think is significant. And that's one of the real differentiators of our company is we've got a real growth phase ahead of us this year. We're funded to do it. If we can get it up to that sort of 100 million pounds, that's when we'll look at changing the scale of the project and updating feasibility studies through 2027 and then into 2028, looking at sort of financing, all with an aim of bringing uranium on by maybe 2030, 2031, which was when you're right in the crux of the shortfall that everyone knows we're walking into.
When NextGen isn't producing yet, effectively.
Yeah, well, that would be favourable for us, right? So that's a big call to say they'll be producing all of that in year one.
Who knows? Who knows? Jury's out, maybe. So have you putting any attention at the moment towards funding or anything, or just solely focusing on drilling for this year? And how much cash have you got in the bank to do it?
Yeah, so last question first. So 16.3 end of March. Our budget to drill upwards of 50,000 metres through the rest of the year still has us with 9 million in the bank at the end of the year. So we don't need cash. We're fine.
Yeah.
Now I've forgotten the first question. Are we doing
just financing. Like, is there much interest out there? People, utilities, or anyone coming to you to talk about future uranium supply? What's the vibe? I know you're early into the role, but even with since it started.
So we've got a consulting sales and marketing exec who used to work for Cameco for 5 years, used to do the sales at Olympic Dam. And he was Goviex's sales and marketing guy for a long time. And Goviex were participating in some of those RFPs where from utilities we continue to receive the RFPs, but we're not participating in them at the moment. Our focus is around resource growth and then updating the studies with a larger scale mine. In terms of financing, of course, I think we'd probably go down a similar route to a Bannerman. I think it's going to lend itself to a strategic process.
Yeah.
I think, and when I say strategics, I'm not just talking private equity funds. Like sovereign states are obviously playing a big role moving forward in these things. And I think the question will come when we are entertaining those same discussions. Do we go down a similar path of a project level sell down like Bannerman? Do you do a Listco raise? What's in shareholders' best interests? And I'm sure there'll be suitors around to try to buy the whole thing as well. So we exist to extract the best value for shareholders, however that looks. But we do have a team in place that have done it before in uranium, and certainly we're not shy of taking this project towards development if that's in shareholders' best interest.
So who's Bannerman? Like Namibia's got the big Chinese presence, which Bannerman's done the deal with. If we're talking Zambia, who are some of the likely project partners there if you were going to sell a stake?
Yeah, look, I think Bannerman ran a process for 2 years, and the corporate advisors that ran that process I'm pretty close with. And I think that Chinese would be very interested. I think the US government are very interested. I think the likes of Kazatomprom and I think a lot of other incumbents would be interested as they're looking for new mines and things. So I don't think there'll be any shortage when we sort of find the time to or are in a position to run that sort of process. I'm sure there'll be a lot of interest, and a lot of these parties have done due diligence on modest grade African heap leach. So anyone that missed out, I'm sure, is wondering where's the next one going to come from. And when you look at the uranium projects under development, there aren't really a hell of a lot. This whole pipeline has suffered from a pretty poor lack of investment since Fukushima, and I think everyone talks about incentive prices to provide the returns required for our equity holders and debt providers and everybody else. But all of that's going to be required to bring this new wave in. And I think this project is perfectly placed when you've got a great stable jurisdiction like Zambia and pounds that can come on by 2030, 2031. I think the utilities are going to start squabbling over what's left at that point.
So, and I suppose the big selling point's going to be look at the old study, average annual production of 2.2 million pounds. It's that seems to be like the 1 to 2 million pound is pretty common. It's getting up to sort of the 4s and 5s, or even just 4 million pounds per annum to really separate yourself from the field. But because you're doing heap leach, I know you haven't gone into the studies yet, but to increase the output on a heap leach, is there spatial constraints because you got to stack everything up and pour acid on it? Is there any limitations with this process?
You don't keep going higher. You go further outwards.
Yeah.
So no, it's subject to land. So no, there's no constraints. As I said before, it's not very capital intensive to increase the scale. So that analogy I said before, when you're 3.5 million tonne per annum plant for us and 282 mil capex, Bannerman's 8 million tonnes, so more than twice the size. 350 mil capex, so only 20% higher capex. So it's low capital intensity to make this thing bigger. I think the other thing to look at in how to pitch these, how to value these sorts of things, if you look at an EV to resource pound at the moment of the likes of Bannerman and Deep Yellow, I think we're trading probably $2.50 a pound. I think Bannerman's around $5.50, $6 a pound, and Deep Yellow's about $8 a pound. So we're for a development-ready asset on mining licenses in a stable jurisdiction, and also with the growth profile we've got, if we can add to the resource, then we'll look even cheaper on a EV to resource pound basis. It's criminal how undervalued we are. We are just getting started, but super undervalued relative to those peers. And our grades are a higher grade, and that's how I sort of look at the peer comps. And Bannerman at that transaction that they did, $1 billion post-money value implied by that transaction, that's sort of 6-7 times our EV. So that's the sign of the prize for us in Zambia if we can get the same scale and profile they have.
Interesting. You don't have to comment, but interesting peer comparison is your market cap's nearly the same as Lotus's, and they're producing at the moment.
Yeah, big fall from grace. If they can get that right, then it appears cheap. But do they need more money? Yeah, it's there were people involved in our company that were involved in that at times, and definitely still think it's a good asset. Just got to get everything right, I guess.
Yeah. In what sort of permitting and government hurdles have you got ahead? Let's fast forward to the point, assuming you don't get bought and you've got to, progress this towards a mineable project, or so it's mineable by someone else if they buy it. What are the permitting hurdles and everything?
Yes. Yeah. So there's an image in our presentation that shows all of the tenements, all of the dark tenements that host the resources are on mining licenses. So we've got all the mining licenses in place. The environmental approvals were submitted in October 2025 by Goviex. I'm expecting, having met the Zambia Environmental Management Authority a couple of weeks ago, I'm expecting by the middle of this year that we should have environmental approvals for the project as it was contemplated in that previous feasibility study. The resettlement action plan was also submitted in October 2025. And again, I think by around the middle of this year, we should have that in place. So there are a lot of the key permits. I think you'll need export permits and these sorts of things as well, but working with the Radiation Protection Authority around that. I don't envisage any of those things being issues. So yeah, in the next few months, I think we could be largely permitted if we wanted to go and build a mine immediately. As I said, that wouldn't be the plan. But it's worth noting that if we didn't find another pound of uranium, the 58.8 million pounds that we already have, keep in mind that only Dibwe East and Muntanga were used in that previous feasibility study. So the 11 million pounds we've just added, the measured and indicated components of Muntanga and Dibwe East, as well as these other satellite deposits, which were shown to be cash flow positive in previous studies by Goviex. If you incorporated all of those into the feed, you're at sort of 3.9 million pounds per annum for a 12-year mine life. So you already do have a critical mass of resources in the ground there where I think you can achieve an increased scale. You've obviously got some infill drilling and some met test work to verify some of those things on the new deposits particularly. But I don't think we're too far away from having something. it's a conscious decision by us to want to make this thing big. And the fact it hasn't been drilled in 15 years, and the fact we've had such an impact with a modest budget already, that's what really excites us for the upcoming year.
Yeah, very good. Recent board changes. So Grant Davey has been promoted to, or brought in now as the exec chair. Obviously came in via the deal. Obviously, note he's had some historical things in the media, but I guess I just want to ask why the decision to bring him on as an exec chair going forward. What are you looking to change?
Sure. So he's non-exec chair, just to be
Non-exec,
clear.
sorry about
No, that's all right. Yeah, look, I've known Grant 10 years. Grant's had, more experience in uranium than even the higher profile ones. So he was the founder of Boss. He was the founder of Lotus. He was imminently involved in feasibility studies and the promotion of all of those companies. And I'm sure investors made a hell of a lot of money at the right times in those stocks. I think Boss became a $2 billion company at one point. And Lotus at one point was $1 billion market cap, so has obviously fallen significantly. And we're only trading just above where we RTO'd at, and so getting in at the same time as Grant, I think is usually a pretty good playbook in the uranium space. So bringing him in with that experience, and one of the things from working with him for the last 10 years that I think about Grant is, he's one of the best custodians of shareholders' money that I've seen. He and I are very conscious of making sure that we control how the shareholders' money is spent, and obviously reporting on that. And Grant and I work very well together, and I think it's a great addition to the board. We've also got Keith Bowes on the board, who was the managing director of Lotus for 5 years, technical by background, and so I think we've got some great uranium expertise and experience on the board, and that's why I mentioned we're capable of taking this through to development if that's in the best interest of shareholders. Yeah.
Look, I appreciate the the historical share price rises with his involvement, but is he bringing much in terms of, I guess, the international connections, like if we're talking strategic partners and that side of things, foreign investment and everything like that? Where's all that going to start coming from? Him or?
There's a lot of insider roadshow in North America in March. There's a lot of institutions that have made money backing Grant's uranium stocks before. And so he has a great relationship with a number of those. And that was extremely clear when I was on the roadshow meeting those groups. I don't think Grant's going to be the one that's going to be calling up strategics and utilities. We don't need him to be honest. As I mentioned, we've got a sales and marketing guy with a great Rolodex in that space. And there's corporate advisors that are talking every day to these big uranium companies. So when the time's right, we'll be able to open those doors, not a problem. But I think, Grant's assistance on the financing side would be more on the institutional connections that have made money from him before in uranium.
Roger that. Finally, mate, the forgotten stepchild, the asset in Niger. Everyone probably knows Niger because of the global atomic mine. That whole saga, but probably not many people know that Atomic Eagle also has a mine in Niger that is in the hands of Niger, effectively under arbitration. Take us through just quickly what the deposit is, and what's the status of it, and if there's a hope in hell ever.
Sure. Goviex probably worked on it for maybe 15 to 20 years. They spent $160 million on the acquisition, exploration, and development of the asset. The resource is 116 million pounds at 1,319 ppm. So it's a huge project. So that's 4 times the grade of our Zambian asset and more than twice the size. So a world-class asset on any stretch. Mentioned how much they spent in 2024. So I think there's a military coup in Niger in 2023. By mid-2024, the Niger government expropriated the asset from Goviex. Goviex commenced international arbitration proceedings. And then in early 2025, the Niger government and Goviex management signed a pause on those arbitration proceedings to negotiate a resolution to it all, which may or may not include giving the asset back to the company. In the 5 months since I've been involved and together with Grant, we've continued those discussions in Saudi Arabia and in country. And those discussions are continuing as we speak. It's not fanciful to say that we could get the asset back, and what that would look like would be a new mining convention and a new exploitation permit. But failing that as a plan A, and that is our plan A. Plan B is arbitration, of course, and we have preserved our rights on that. If we were to unpause the arbitration, then you'd be back in that world. And I think if we were to go back to that world, we wouldn't want to waste shareholders' dollars on it. We would want to pursue litigation funding, and from soundings out, I believe that would be forthcoming, and given the quality of the claim and quality of the asset. But I think Plan A is what we're working on, trying to get the asset back. We think it has a hell of a lot of value. I think a lot of those strategics I mentioned before would also be really interested in the asset, and I think there's still a lot of upside to the asset. There's a lot of exploration potential still there to grow the 116 million pounds, and we think reimagining the feasibility study with an open pit mine plan rather than underground that was imagined there was a 2022 SRK feasibility study that was done on the asset, so it's a very recent and development ready project. We think we could really reimagine it and extract value for shareholders. But I think the real point that I want to emphasise is we listed off the back of Zambia. Those EV to resource pound numbers are off the back of Zambia. I strongly feel we are very undervalued off the back of our Zambian asset. Niger is an option value only. As you stated, we don't own anything technically at the moment other than the historical rights and an arbitration claim over the top of those rights. So it is option value. You don't buy Atomic Eagle purely because of Niger, but it is a bloody nice set of steak knives if we can achieve something there.
Locked in the cupboard.
100%.
No, too easy, mate. Well,
in the coming months, I think there'll be a resolution one way or another on which way Plan A or Plan B we go there.
Yeah, and at least you know that if there's a negative resolution, your share price is not going to go down because there's zero value anyway. So.
Yeah, would have thought so.
You'd hope so. Mate, Phil, thanks very much for coming on, mate. Anything I've missed? It's your opportunity to full send it.
Yeah, look, I don't think so. I think as a stock and relative to other uranium stocks, I think we are unique in that I call it having many tickets in the raffle. I think we're not just the sort of pregnant company at DFS with nowhere to grow the company. We've got really good exploration targets that we think we're going to grow the resource. We think when we can demonstrate what that scale does to the economics of the project, I believe that will add value to the company. And obviously, if you get Niger back, that'll add value to the company. So we're not just a play on the uranium price, albeit if uranium moves, then we'll move as well. Yeah.
Wonder if I can I may just have a tickle. I can't confirm yet, but you'll know when I do. I'm not sure. I'm still, as I said, I'm still weighing up if I put you guys against Lotus, which is countries next door to each other with Malawi and Zambia. Haven't made a decision yet. So, but you coming on ahead of the Lotus MDs probably put yourself in favour.
We definitely don't need to raise money. So that's what I'll say. But I look forward to you hopping in the market and moving the needle for us. That'd be great.
Too easy, mate. Right, mate. Thanks, Heap, for coming on, and bloody much appreciated. Best of luck over there in both jurisdictions.
Yeah, cheers, Matt.